You're listening to the Rite Retirement Show.
The 70% of people out there listening to the show today are going to need some level of care. It doesn't necessarily mean that 70% are going to end up in a nursing home, but 70% of people will need some assistance out there. The biggest fear is running out of money for the retiree, but what we see is not enough people spend enough of their money.
Cris prides himself in what matters to you. This is the Rite Retirement Show.
Hey there, I'm Luann Fulmer, and you've turned into the Rite Show. That's right, the Rite Retirement Show. Sharing wisdom with us today is certified financial planner and financial advisor Cris Wallace. He's president at WG Financial Group, where they want to help you plan smarter, retire stronger, and play, living your best life ever in retirement. Isn't that what we all want? If you have questions, Cris wants to hear from you for sure. You can call or text the word VISIT to 256-937-2010. Again, 256-937-2010. You can get a complimentary discovery session. Remember, you can always follow us on Facebook throughout the week. Cris will add anything related to retirement. He'll update it all week long. Check us out there. Just look for name of the company, WG Financial Group, 256. And remember, you can go to wgfinancialgroup.com for our past shows. Also, wherever you get your podcasts, Spotify, Apple Podcasts, just check us out, wgfinancialgroup.com. And Cris, hi there. You're flying solo today.
I am. My little sidekick is not here today, so it's just you and I, old times,
it's old
as we like to say.
Kind of old times sakes here. So,
can you believe it's been like 10 years since we've been on the air?
I know. 10 years, right?
Longest running independent financial radio show in Huntsville.
Oh, I love that. That makes me so happy.
Yeah.
That makes my
awesome.
eyes water.
Aw.
I'm very happy. Really, I am. I'm so pleased to be a part of your team in some small way, and I love to talk about what you guys are doing, the awesome things that you're doing.
Luann, hold on. Don't diminish what you just said in a small way. So you were a part of my big launch in Huntsville. I mean, this is where we do the majority of our business is in the Huntsville, Alabama area. And to have you a part of the show now for 10 years, and this is what really, I don't want to, when I say this, I don't mean this arrogantly, but put us on the map, so to speak, is we started the radio show. We started with a little small 30-minute show, and then it morphed into an hour, and then we got, several time slots. And, even though radio, I think in my view, long term is somewhat of a dying breed. There's still a lot of good listeners out there that like to tune in to AM and FM radio when they're going to the store or they're working in the garage or doing just tasks around the house. So there's definitely still a market for it. But you were a big part of my career, and I sincerely appreciate you for that.
Oh, thank you so much. Yeah, we've gone through a lot, from beginning to where we are now. So that's fun.
Yes.
Very, very cool to watch your company grow.
And then Graham is obviously he's not here. And then to watch this young man who basically I kind of grabbed right out of high school.
Right. I mean, it was a graduation party, I think, wasn't it, Cris?
It was. And I watched him go through college and mentored and coached him. And man, what a brilliant mind that little young man is. And what he's able to do for the clients that he meets with and services is it's a thing to watch. It really makes me proud of him,
Yes, exactly.
And watching the young team that I have that works with us at the office, because one of the things that I used to get starting probably more so in the past like 4 to 5 years, as I picked up more gray hair, I had a lot of people they would say it like this. They would say, Cris, what happens if something. And they would kind of stutter and stammer a little bit. And I would say, like, if I die? And they're like, well, we didn't really want to say that. And I said, but that's what you were thinking. And they were like, okay, yeah. So at that time, years ago, it was like, hey, you'll have to find another advisor.
Right,
So what we've been able to do at the office is build a really tight-knit team. Like, we have an amazing culture at the office. We have a really tight-knit advisory team, an administrative team that takes care of our clients. And that way, if God calls me home, because that's the thing, like we just don't know when our last day here is. And if that happens, I have a really strong team of young professionals and just all various ages that can step in. They're super knowledgeable. They think the same way that I do because I ingrain it in their head, at the office and our training sessions each week and our conference calls that we do as a team. I'm constantly talking to them about this is what you need to look for if you run across this scenario. One of the things we talked about this week was if you meet with maybe a single individual that's divorced. Okay, so that's a flag right there for you to think about. Not a flag that they're divorced, but a flag in your head to go, hey, I need to probe a little bit deeper, and you need to ask how long were they married, is how old they are, of course, because that also matters. If they were divorced and they're above age 60 and they haven't remarried, then they have an opportunity. If the ex-spouse were to have passed away, unfortunately, they can also draw off of that Social Security benefit. So in my training with my advisors, we're going through these scenarios. And after, call it 20 years in the industry at this point, more than 20 years, I've almost lost count. I've seen a lot of stuff happen. And through my CFP studies, coupled with the real world, and as I mentioned earlier, the gray hair, I've just seen a lot of families and individuals roll through the office and different scenarios and situations come up, and I'm able to kind of pass that knowledge on. And the advisory members that I have on my team, they are very fortunate because we work very closely together because our office is a smaller office. And we're able to work closely together, and we hear a lot of the same stories. So they learn much more quickly than if they were in a big corporation and, trying to learn, trial by fire in some cases. But I think we all know that when we went to college, we learned a specific topic, whatever our degree was on. But when you got out of college, you were ready to go. And let's say you had like a marketing degree or something like that, or maybe engineering, since Huntsville is full of engineers. And you came out, you're aggressive, you're ready to go, you went to work, and then you quickly learned that there's real world and there's blueprint. Mm-hmm. And real world and blueprint don't always match up, and you have to find a way to marry the two. And I think in some ways that's like it is with financial planning. So when I have new team members join our firm, they're very smart, they're very bright, and sometimes they just lack some of that real world stuff. And that's, I think, one of the benefits of working at a firm with me is I actually can transfer that knowledge onto them and help them bridge those gaps, because sometimes there are a little bit of a gap there, and we just have to bridge those gaps at the office.
Right. That's what you do. That's what you do so well. So I love that. So, okay. Well, things going on all over the world and across our country. The markets are a little uncertain right now. Why don't you give us just kind of your viewpoint of the market right now?
Yeah, I think there's a lot of uncertainty, and I always kind of talk about how a few Saturdays ago I wake up and I get out of bed, I make my coffee, I pick up my phone, and it's like, oh man, we invaded Iran, or we bombed Iran rather.
Right.
And I remember thinking to myself, oh man, this next week's going to be probably rough in the markets, and it was a little volatile, but there's a lot of uncertainty right now because I don't think anyone really knows what President Trump and his administration are going to do long term. And I kind of laugh about it a little bit, from time to time, because at one minute we hear there's a deal on the table.
Oh, yeah.
And then like 24 hours later, it's like, oh, just kidding.
Well, we're like,
no
the
deal.
war's going to be over, and the markets actually reacted to everything he was saying, Chris.
Oh, for sure. The market right now is really trading on emotions. And this is what makes it incredibly difficult to try to time the getting in and getting out and figuring out what you're going to do in terms of Roth conversions, or maybe you've got cash on the sidelines and you're looking for an entry point. It makes it really hard to time that market right now because it is trading on emotion. And I think, like I said, there's just the headline is the war's over. There's a deal, and just kidding. No, it's not. And then you're like, I think it was like last weekend, maybe that, or maybe it was the weekend before. I've kind of lost track of some of this stuff now because it's happened. No, it hasn't. And it's happened. It's not true. But I think it was last weekend. I think it was Iran closed the strait again.
Yeah.
And it's like,
right.
Are you serious right now?
Yeah, like on Friday he said it was open, right? Whoever he was speaking to. Then on Saturday, no, it's not.
Exactly. And then on Saturday, it's closed. Yeah. And it's like, oh my gosh, So what I do try not to, I have to stay plugged in as the owner of the company. And the advisor at the office, the main advisor at the office. I have to stay in tune with it. And I do try to unplug, but at the same time, I have to stay plugged in to a certain degree. And I have to filter a lot of bad information because, AI is a real thing out there these days. Videos can be created, pictures can be created, and they can be posted. And I think, we've all laughed about the person, especially like our parents. Like my mom is famous for saying, I saw this on Facebook. I saw this on Facebook. This is, and so now
it's the truth.
Right, exactly. And my mom would think, oh, that's the truth. Yeah. It was on the internet, right? And now all of a sudden we've got AI. They can make videos and they can make pictures, and all of a sudden it's posted, and you see this person that's posted it, and they got a blue check mark by their name, and you're like, whoa, man, they must be real, which means the picture, then the words that they put out there in front of me has to be real. And so it can be very, very exhausting is really what it is. It's mentally exhausting. So you have to know how to filter a lot of that and dig and find out whether or not it's true. And one of the barometers out there is the market. And you kind of look at how the market's reacting. If you're reading a very negative post, then click over to the market page and what's the stock market doing? It's up. Okay, well then that post is probably fake.
Yeah, right.
It's probably, or maybe it might have some small truth to it. But if the market is not reacting in a big time negative way, maybe your emotions shouldn't either, because that's what happens. We just read stuff, and so I think the market right now, like we were saying earlier, is just very unpredictable. I think it's so important for everybody to have a financial plan. I can't stress that enough. And having a plan doesn't mean that you're retired and you're sitting behind your computer with your Excel spreadsheet and you're going to cash or you're buying gold and you're in and out and in and out. Man, that's not retirement for me. Like, it's not. Like, I'm telling you, when I retire, I'm going to retire. And I'm not going to sit there and I'm not going to watch my portfolio every day. I'm going to have somebody that is in charge of actually managing my assets. A lot of people don't know that. Listen to the show. Cris has a significant portion of my own personal money that is professionally managed. And that's by design, because I am human just like everyone else. And I don't have the emotional restraint at times to not go in and mess around with it. But when I'm in retirement, I don't want to deal with that. I don't. I really don't. I don't want that stress. Like, most people, have worked 30, 40 years in some cases to build their retirement. They've gone through a lot of stress at work. They've worked their way up the corporate ladder. A lot of people, we work with their engineers, and they come in and they're tired. And then you want to retire and deal with the market being your boss, because that's what it's going to feel like from an emotional standpoint. You're going to be emotional about it. Market's going to drop, and next president's going to get in. You're not going to like that person. It's just, I don't want to deal with that. And it just baffles me. Many people won't surround themselves with good professionals to kind of help them navigate something they've really never done before. Like, I always try to tell people like this, Luann, this is your first retirement. It's not my first. And we've helped a lot of families that are going through it right now. And honestly, like I've said on the show before, like, when you first retire, it's going to feel weird in a lot of cases.
Yeah.
With the exception of the gentleman I talked to last week. That's a client of ours. He came in and he's been retired like 3 months.
Yeah.
And usually 3 months, man, you're still going through it emotionally. You're still like, I don't have the paycheck, and oh my goodness, this and that. And so I asked him, I said, how's it going? He's like, man, I wish I'd have done it sooner.
Oh, wow.
I was like, really? I was like, are you good? You're okay? Yeah. He's like, man, I wish I'd have done it sooner. I said, so you don't have any psychological like worries? You're not wishing that no, like emphatic no's.
Oh, why?
Yeah, so that's kind of rare. So, but it does happen, and he does have the assets to retire. He has a plan in place, so maybe that did it. But there's people I work with that have a plan in place, and they come talk to me, and they're still nervous because that's normal. So, as you get ready to retire, just be prepared for that. And I think having that plan in place will at least help mitigate some of it, and it'll pull you back to center in a lot of cases when you look at the numbers and see how things are kind of panning out, look at where your income's coming from. I think it can kind of help settle down some of that nervousness.
Yeah, definitely. Well, okay. So, as you're talking about our economy is kind of at a tipping point, and the Federal Reserve recently released its Beige Book report. And what that is it highlighted massive, widespread economic concerns across our country. And so, Chris, I want you to help us make sense of all this global uncertainty that's been hitting our economy so hard, like you're saying.
Yeah, so the Feds right now, if you remember, and some of you follow this stuff kind of a little more closely than others, but at the beginning, we'll say the tail end of last year in fourth quarter, the market was pretty much ready for the Feds to start cutting rates. And what we saw the 10-year yield drop, and it dropped all the way down to around right around 4%. And then all of a sudden we invade Iran. And the 10-year yield pops back up to like 450, and now it's trading around 430 or somewhere close to that right now. And what that was investors basically they were basically unpricing in the rate cuts. So the market thought that the Feds were going to start cutting rates because of the way things were looking. President Trump was going to appoint a new Fed chair, and now all of a sudden, that's not happening. Now we've got an invasion. We've got oil prices going up. And now there is a fear that inflation is going to remain a little bit elevated for a little bit. And that's simply because of oil prices at this point. So the Feds are kind of adopting a little bit of a wait and see approach. And when I went out to look at the futures before we got on air, so I could kind of talk about this. The next meeting is actually tomorrow. So we're recording on Tuesday, and tomorrow will be the 29th, and they'll go through another meeting, and there will not be a rate cut. They're going to maintain where it is, and the current range is 350 to 375. So they're going to leave the Fed funds rate at that point. And I have to go all the way out to December of this year, and it's still an 81% chance that there's no rate cut this year. So what has happened? Yeah, exactly. No, it really. And I think it kind of stinks for those that were looking to refinance, because there were people that bought houses a couple of years ago in the high sixes in interest rates. And as the 10-year yield started to drop, then it's like, okay, well, honey, we might be able to refinance, or we might be able to buy this house at a cheaper interest rate. Well, guess what? That kind of took a reversal there once we invaded Iran. And now the Feds, the markets are basically not pricing in any cuts this year. It's basically saying it's going to maintain for the rest of the year. Okay. Now, again, for people that were looking to refinance or hoping to refinance or hoping that when President Trump appointed the new Fed chair that rates were going to get cut, it's probably going to be a pretty sore disappointment there. And I was on board I thought, well, Trump is going to come in, his administration, Powell's going to be out because his term will be over. He'll appoint somebody that's a little bit more, I'll just do them a little quotations here, rate cut friendly, right? And I thought, well, maybe there's a potential because of that. We may see a couple more rate cuts than maybe we would have normally seen. But I don't think that's going to happen, because I don't think you can cut rates when the price of oil is back up as high as it is, because oil is a big driver in a lot of things. One, I came out of the manufacturing industry. I was an engineer and former plant manager, and we dealt in automotive plastics. Well, oil is involved in plastics. Oil is involved in the delivery of almost any component around the world because it goes in fuel. And so I think with oil prices as high as it is, now all of a sudden you've got a situation where the cost of goods have kind of crept up a little bit. And I still just think there's a little bit of a concern just regarding inflation in general. And so I think right now the Feds are going to just kind of sit back and kind of watch how things go. And then I'll kind of close out a little bit of this conversation here, and I'll give it back to you for a second. But there's a part of me, and I talked about this on one of the shows. It might have been 2 or 3 years ago. No, wasn't that long ago. 2 or 3 weeks ago. I just can't remember which show it was. But I can't help but wonder if through this process, and I'm trying to think like Donald Trump, which is a little hard to do sometimes, But, we went in and removed Venezuela's, basically their dictator, and now we've invaded Iran. And part of me wants to think that there's a bigger picture here. There's the Iran, and I think we can agree that they're a funder of terrorism, and they can be a problem, in the global world for sure. But part of me wants to think that maybe there's behind the scenes stuff going on with maybe Russia and China, and maybe there's a deal that's going to come out because Trump is a dealer, right? He makes deals.
He is.
So part of me wants to think, okay, well, is all of this happening because there's a backdoor way to get to a better deal with China? Because we still buy a lot of goods from overseas, so maybe there's a way to do that, and maybe there's a way to work something out with Russia to kind of end the Ukraine war. Okay, so that's conspiracy according to Cris, but I don't know, and I just don't know. And so, with the positive side of me wants to think, okay, well, maybe, just maybe, there's a little bit more at stake here, and
I agree with you.
I'm hopeful. I mean,
Right.
I'm trying to be optimistic because the market, and it has to some degree kind of blown off the Iran war a little bit, and we've seen an uptick, and it's positive on the year, and I think Graham said it I think it was last week, but basically the market has kind of like said, okay, well, this is just another administrative action by the Trump administration, and we're just going to keep on keeping on. So we'll see.
Very interesting. I'm with you in that I do believe he's making chess moves. Each one of these things he's doing is a move. And I totally agree something more is going on than we even can fathom. Yeah. And
I
he
agree.
meets with the Chinese leader here soon, in another week or so. So, who knows?
Yeah, and it would be, honestly, I mean, I don't like to get political on the show, but right now, these political moves are impacting the markets. Let's face it. I mean, year to date, as we're recording, the S&P is back positive by about 4%. But these deals that he's trying to construct, he's going to need to hurry up, because if he doesn't, we all vote with our pocketbook. And so now we have the midterms coming up. And historically, it doesn't bode well for the sitting president. The midterms typically don't. So I think he has to come out with kind of a flash bang kind of a deal to turn something around. But I mean, again, just think about going to the grocery store nowadays, and we talk about like inflation and how expensive things are today. Right. Like, we're all paying that. And that's what I think even the young people don't realize, is that, inflation, and it started back, a few years ago, and inflation is the silent tax on every one of us. So it don't matter how much money you make. I think if you make more money, you can afford a little bit more convenience, but you're still paying the same price for a carton of eggs. You're still paying the same price for ground beef. And I bought some steak over the weekend. I could not believe how much 5 pieces of steak for our family now cost. It's holy cow.
It had to be so expensive per pound. Oh my.
Yeah, and we went.
Imagine.
Yeah, we went by the Big C and bought them, and they were still expensive. I can only imagine if I'd bought them from like a meat market or something like that, it would have, it would have been a lot more expensive.
Oh my gosh, yeah, definitely. Well, okay. I guess I'm looking at the time. We still have a little time here. As far as the the feds, and they're saying that the businesses are adopting this wait and see approach. Okay. Would that same strategy work for someone retiring or getting closer to retirement? What would you recommend?
Yeah, I think when you talk about retirement, I don't think you can do what I would call a wait and see approach. And the reason I say that is, I think when you're getting close to retirement, I think you have to start putting a plan in place. And I think that you have to build your plan, and this is the way we talk about it in the office. The first thing you need to do is plan on your plan not going according to how you've planned it. Okay, that's the first thing. Yeah. And when we're building a plan at the office, that's kind of our mentality, is like, okay, like, what's the worst case scenario? Well, the worst case scenario is the world blows up and we're all on that sinking ship together, or the entire banking system fails and we're all in the same boat there, or whatever. But I think when you're building your financial plan, I definitely think you should build it in a way that it can lean a little bit more towards the worst case side of things, and do that in anticipation of your plan not working out to how you've planned it. Okay, and so when you're thinking about that in your pre-retirement years, I think it's time to start looking at your retirement income sources. Where that money's going to come from. Is it guaranteed? Is it not? Is it COLA adjusted? Is it not? And if you're going to pull from an IRA, how much are you going to pull? How much are you going to pull out of your non-qualified taxable accounts? Are you going to wait on Social Security? If so, how long? If you've got a spouse that's a little bit younger, what do we do with that other spouse's income and Social Security? Do we wait on them? Do we collect them a little bit early? I think there's a lot of decisions that you have to make as you prep for retirement, but I think you have to start building out that plan. And I think it's helpful to have somebody help you do that, because for most people out there today, you're only going to get one chance to retire, and you want to make sure you get it right. Exactly. And so I think it whether it's our firm or somebody else, my message to the Huntsville population out there is just find somebody you can trust, sit down with them, interview them, go through their process, listen to the things they tell you, and if there's synergy, then maybe consider working with them, because they've done a few of these. And this is not their first retirement, as I mentioned before. It's not my first retirement that I've ever worked with. It's your first one, but I've seen a lot of other retirements very similar to yours, and they're not all the same. And I think that's what we have to realize is when you go into an advisor's office, you definitely don't want what I would call cookie cutter, but they're going to kind of all smell the same. And that's what I tell people. They all, they all kind of rhyme in a way. Mm-hmm. People don't want to run out of money. They want to pay as little tax as possible, and most people don't want to take a tremendous amount of risk in retirement. And I think interviewing an advisor and discussing that and really kind of sniffing out whether or not you think they're salesy and, if you can work with them long term, because once you start working with an advisor, you're kind of in that relationship. So you want to work with a team of people that you enjoy being around. Like if you dread going to the office to talk to somebody, they're probably not the right person for you. I mean, let's just be honest. If you're dreading going into your advisor's office, or he or she's just going to pull out charts and they're not going to talk like real world stuff. Like in our discovery meetings, we get into some real world types of situations. We're talking about family. We're talking about your kids. What's the plan there? Do you have young kids? Do you have young grandkids? Like, we're talking about all of that. We're not just going over, hey, well, we've run this Monte Carlo, which we do. We've run this Monte Carlo, and you're not going to run out of money. Okay, well, there's a lot more to people than just their money. And I think working with somebody that has like your family's best interest at heart is, a good idea in my opinion.
Right, exactly.
Yeah. So I know we're about out of time, Lou Ann, so I want to kind of transition us off because okay. I know if you're listening to the show, you're catching the first half on the way to church probably. If you want to listen to the whole episode, you can hop out to the Spotify platforms, the Apple Podcast platforms. You can listen to the whole show. Just search the Rite Retirement Show, RITE. If you'd like to set up a discovery session to come in and talk to my team, you can do that by calling 256-937-2010. Again, the number's 256-937-2010.
Would you rather pay more or less in taxes? If you want to pay more, don't do anything. If you want to pay less, talk to Cris Wallace to see what's possible for you. Just text VISIT to 256-937-2010. Again, text VISIT to 256-937-2010.
Are you a federal employee feeling pressure from the early retirement offers like VERA, VSIP, or the Deferred Resignation Program? Recent government initiatives have introduced significant changes to federal retirement programs, making employees feel pressured to consider early retirement or face potential layoffs. At WG Financial Group, we help guide federal employees through these uncertain times. Our team understands the complex federal retirement systems and can help you make informed decisions. Call 256-937-2010 to schedule your complimentary discovery session with us today. We'll help you assess your options and create a personalized retirement plan to help you feel more confident. Visit WGFinancialGroup.com or call 256-937-2010 to book your session. Firm is not affiliated with the U.S. government. Investment advisory services offered through AE Wealth Management, LLC, an SEC registered investment advisor.
Dreaming up your ideal retirement? It starts with a solid plan tailored to your unique goals. Set aside uncertainty by arranging a friendly, informative session with Cris Wallace. Just text VISIT to 256-937-2010. That's text VISIT to 256-937-2010. Begin charting your course with confidence.
And we're so happy to have you with us today. Thank you for hanging out. This is the Rite Retirement Show with Cris Wallace. He's a certified financial planner and financial advisor at WG Financial Group. So they are a team that works so hard to help you plan, retire, and play. That's their motto for you. And that's what they do. They want to help you plan everything out, everything from your income, investment strategies, tax strategies, healthcare strategies, and even your legacy plan. And that all becomes a plan for you. And you can get started on this by calling for a discovery session. Cris gave the number. I'll give it again, 256-937-2010. Call or text VISIT. Today I'm talking with Cris about how global conflicts are pressuring our U.S. economy. And Cris, I want to talk about inflation a little bit more. The Fed now admits that they have been missing their 2% inflation target for 5 years straight. So what does that mean truly for retirees?
Yeah, it means that retirement is more expensive for you than you probably thought it was going to be.
Yeah.
And that's kind of a sad thing, because I think if you look at when, I was just kind of looking at this, jotting some notes down before the show here, before we started. If you retired in, say, 2019, you probably thought, wow, this is great. Market's up. I think the market was up about 30% in 2019. And you're like, okay, this is wonderful. Then we get into like February of 2020, and then COVID starts kind of rearing its head. And then in your first year of retirement, we have the COVID shutdowns and the market drops, and basically shutting down the entire economic world. And then just 2 years later, after 2021, there was a rebound. In 2022, we had a downturn of about 20%. So here you are, retired in 2019. We've got interest rates got crashed to zero, which kind of helped from an inflationary standpoint at the time. Mm-hmm. It hurt long term, and I'll get to that. But at the time, it helped. And then 2021, a rebound year, you're like, okay, whew, all right, COVID was a shutdown, and now 2021's better. But then 2022, we've got a negative 20% downturn. And then in 2022, at the same time, now all of a sudden, we have this inflation that really starts to take off. And the inflation was a product of all of the money pumped into the system, the shutdown, low interest rate. There was a big pot of stuff that happened that ultimately led to a nasty recipe for inflation. But in 2022, along with the downturn, now all of a sudden you've got stocks that are dropping, you've got inflation that's taken off, and because of that, now you have bonds that are dropping. So you've retired in 2019, COVID happens, 21 was a rebound year, 22 now I've got stocks and bonds both dropping, and I've got inflation going up, and now my groceries are very expensive, and I've just retired, and I've got all of this going on. Yeah. It was literally like the perfect storm in a negative way for the retiree today. And the bad part, and I've said this a million times on the show, the really bad part about inflation is just because inflation is dropping does not mean that the prices are going to drop. And I think that is what most Americans are wanting to see today, is they're wanting to see price reductions. And that's just not going to happen, because that's the bad part about inflation. It's the permanent elevation in price. So if you retired, in the last 3-4 years, congratulations, your retirement is much more expensive than you thought it was going to be. And the feds initially, if you remember this, Luann, they initially said that the inflation was transitory. It's not going to go on forever.
Okay.
And then what's happened here is now their target is 2%. And they've been trying to get back to that Fed mandate of 2%, and they can't quite get there. And so we've got 5 years we've been trying to get back to 2%, and now we can't. They can't seem to get it there. And now all of a sudden, now we've invaded Iran.
Yes.
So you're a new retiree. We went through all of that. I've repeated several times, and now all of a sudden we've invaded Iran. And here goes the price of oil again. And as we talked about in the first part of the show, how oil impacts, it's like a rippling effect throughout the economy. Mm. And now all of a sudden, the inflation is kind of sticking there, and we can't quite get it down. So I think there's a belief with some people that the feds could raise rates again. I actually don't think that's going to happen. I just think they're kind of stuck where they are at this point until things calm down. I will say that if we were to come up with a plan or some sort of a deal, and we're able to get out of Iran, and the strait gets opened and it stays open, and then we'll see the price of oil come down a little bit, which will impact the short-term pricing pain that we're seeing. But we're not going to, again, we're just because inflation is falling doesn't mean that we're going to see the falling prices as well. But I think what we have to see is we have to see inflation calm down, because like I was mentioning earlier, the price of meat in general is just, it's insane. And it's not just meat, it's like everything.
It is everything. Yeah.
Yeah, you can't go out to eat. I don't know if you pay attention to the little pad, the iPad thing that they bring your food up on when you go out to eat. But if you go out to eat with you and Bobby, it's probably for both of you, it's minimum $35.
Oh, for sure. Yes, it
minimum.
is. Yes, and it used to be for four of us, Chris. It was we'd go to Chili's. We always went to Chili's when the kids were little.
Yeah.
And it would always be about $35 for four of us. And now it's for Bobby and I for two. Yeah.
For sure. And then they spin the iPad around.
Yes.
They say it's going to ask you a few questions.
Yeah.
So here's what I did last night.
What?
So Jennifer and I were on the way home from work, and we rode together yesterday. And it was a great ride home. And so I just was happy, and I said, hey, let's go get ice cream. We hadn't had dinner. So I said, let's just go grab ice cream.
Ooh, yum.
So our dinner last night was ice cream.
Ice cream, yeah.
Yeah. So we went to have ice cream. So healthy, by the way.
Oh.
And,
hey, it's dairy.
yeah. So the little girl, young lady, took my order or whatever, and then she spun that iPad around. She said, it's going to ask you a few questions right there. And I said, actually, I don't have my glasses. Can you read to me what that says?
Oh, no.
And she just kind of looked at me, and then she turned away and started making my ice cream.
She wasn't going to ask you.
I don't know if she didn't understand me or if I made it really awkward, like, I want you to read to me the tip line.
Read to me the tip line.
But as I was eating my ice cream, after we walked outside, I told Jen, I said, did you see what I did? She said, no. I said, I said to her, can you read that? I don't have my glasses on, and she walked away. So
she was not going to ask you for a tip.
Yeah, I don't. Right, exactly. So then I told Jen, I told her what I just told you guys, and I said, I'm wondering if that's the way to get out of that.
I love that idea. Thank you for sharing.
Yeah, can you read this to me and make it really awkward?
Yeah.
Yeah.
Oh my gosh.
So just so we're clear, like, I'm a huge tipper. Yeah. I really am. But we've talked about this before, but I think people have tip fatigue at this point.
Big time. Because they ask for it everywhere.
Everywhere.
Even at the grocery store, do you round up? Do you want to round up to give to our charity? I'm like, nope.
I'm like, no, I give to my church and support other charity ministries and stuff. So, so I am a big tipper. But if you're literally just like putting ice cream in a cup or coffee in a cup, like,
that's your job. You're getting paid for it.
Yeah. I'll tell you another quick story, and I'll get off this. So I'm eating a hamburger the other day, and I'm out to eat, and I shouldn't be telling people I eat out this much.
Eat out.
But, man, I stay so busy. Sometimes it's just easier to grab something else. So anyway,
eating and not skipping. Yeah.
Yes. So I grab a burger, and when I paid for my burger, of course, tip thing, and I was like, okay, I'm feeling generous today, so I will tip on this. And the young lady said, well, I'll bring this out when when your food comes out. And I was like, okay. So I'm sitting in there, and I'm literally like one of two people in there. It was after lunch. It was like a late lunch for me.
Okay.
And it's just me and this one other person. And the girl walks out, and she's like, I think it was like number 57 or something. She's like, Wallace, number 57. And I turned around, and I just raised my hand, and she just kind of stood there. And I was like, wait a minute. You told me when I paid for my food, you were going to bring my food out to me, and you spun the little iPad around and asked me a few questions. I selected one of the questions to give you a tip, and she's standing up there like calling my name, like, I'm going to come get it. And I was like, no.
Bring it to me.
Like, I'm literally 10 feet, like literally the little restaurant's small. I'm literally 10 feet. You can bring it. So she did. She brought it, and I just thought it was funny. It's like, oh my gosh.
Here. Yeah.
Yes, and then goes back behind the register, puts her AirPods in, and gets back on her phone.
And gets on her phone.
Yeah,
exactly.
That is not the school that I came from. That is not the work.
Drives
that is
me crazy.
Oh man, I'm getting kind of fired up about it. But that's that's not the work.
You made her come deliver it to you. I love it.
I did.
Well, yeah, you just tipped her.
Yeah, I mean, it's like, come on, you're just going to go back and play games on your phone or look TikTok videos or something.
Oh my goodness!
Anyway, all right, I'll get off of that.
Phones should not. Excuse me, but phones should not be allowed at work either.
Oh,
Sorry.
they shouldn't. Yeah, they shouldn't. They really shouldn't. So all back to inflation.
Yeah.
So that's part of inflation too, Luann, because we're adding in tips on everything that we do nowadays. And
Yes.
it's just
Yeah, that's
making
right.
what we pay more expensive. So the bottom line is, your question was, they've been missing their target for 5 years. And what does it mean? It kind of means that inflation might be here to stay for a while. I don't necessarily think that it's going to be runaway inflation, although the way that the federal government tracks it, I question the accuracy. And I think most people out there listening to the show today would also agree with that. If they say inflation is at like 3%, it's like, okay, well, like if I look at college cost, if I look at the cost of meat, if I look at several other things, gas, it's gone up quite a bit more than 3%. And I just question the way that they, calculate that and figure that and publish that number, because I think the pain that I feel, you feel, the consumer feels is a lot more than 3%. That's just my personal opinion. And I think as far as a retiree goes, I believe that when you're preparing for retirement, one, we talked about having a plan in place, having an income plan, understanding your income. Now let's talk about your investments. Your investments, believe it or not, do need to be structured in a fashion to outpace inflation. And I think what we've seen over the past 3 years is the retiree has gone around and they've been hunting CD rates. And those of you who are listening to the show that have CDs, your rates are running away from you. They're running lower and lower and lower. And that's what we're seeing. And I think gone are the days of, hey, a few years ago, I was able to get a 6-month, 12-month CD for 5.5%. Well, that's not the case nowadays. Nowadays, we're chasing maybe a low 3 interest rate. And that ain't going to cut it. And I think the longer you sit in those positions, you miss out on potential market upside. So even though the market is volatile, I think that we can all collectively agree that the longer you stay invested, the much more likely you are to make a higher rate of return. So it's very important that you have your dollars in a position to appreciate in terms of value, because we know the value of the actual dollar has continued to drop. So that's why you invest money, is to offset that. Like, you can't just sit in cash. The other thing I want to say today, Luann, it just popped in my head, so I want to get it out because it's been on my mind lately. We've seen a tremendous run up in the price of gold over the past 5 years. And I think there's a lot of people out there that still believe in gold. There's still people that believe that we're going to go back on the gold standard. And I don't think that's ever going to happen. I don't think there's enough gold in the world to
they
run.
say there's only enough gold to fill an Olympic-sized pool or something. Like, there's a finite amount of gold on this earth.
Yeah, I think
it's not growing.
There's probably more than that, if I had to guess. But again, sometimes I meet with people who have bought gold and they've never seen it. That's supposedly stored in a warehouse in Texas or something like that.
Yeah, that's right. Yeah.
Right. So I think first of all, I think you got to be careful with that. If you're trusting sources online and you can't lay your eyes on it. I mean, I would say that anything I invest in, I would like to at least put my eyes on, even if it's a ticker symbol within an IRA account of some sort. But especially if you're buying a physical piece of something, you want to put your eyes on it. And I have talked to people that said, I've never seen it before. It's just kind of warehoused in a place in Texas. And I'm like, okay.
Yeah.
But I think when it comes to gold, people think that, we're going to go back on the gold standard. And I just don't see that as a possibility. And what's amazing to me is the first thing that they will tell me is, well, the BRICS nations are doing it. And I was like, do you know who the BRICS nations are? Brazil, China, India, Russia.
Yeah.
You trust any of those nations? No? Then why do you care that they're buying gold?
Yeah.
They're not nearly the size of the U.S. We are the largest economy in the world. There's just not enough gold to back all the transactions that have to flow through our economy.
Yeah.
Right. So I think with gold, here's my message with gold is I think that you have to be careful, because what's happened is we've seen a big run up in gold. And the price of gold has gone up, and there's been some real good money made by a lot of people. And I think just have to wonder, is gold at the top? Could it go a little higher? Possibly. But when you talk about where it is today relative to like 5 years ago, I said 5 years ago, 5 years ago with gold. I mean, it's up like 158 to maybe 160% over the last 5 years. And most of the time, people will say, well, it can go higher. Well, it can, for sure. But I think what you have to realize is gold does not behave itself like a stock. Gold sometimes is an inflationary hedge. It is also, it kind of reacts to the dollar. So if the dollar is falling, you can see the price of gold go inversely to the dollar. So if the dollar is actually rising in value, you'll see gold drop in most cases. They have a very inverse correlation. And I think what we're seeing with the price of gold, especially over the past 2 to 3 years, is just a big run up in anticipation of rate cuts coming. And I just have to wonder, okay, over the last 5 years, we're up 158%. I've talked to people whose accounts have doubled in the past couple of years because of the price of precious metals going up. And at what point am I being greedy? And when do I need to start being smart? Because if the price of gold, and it's down over the last 3 months, you can pull the data yourself out there if you're listening. At a certain point, if gold does decide to retreat and start to drop, then I think you may be in the position where you may be thinking, well, it'll come back. Well, it might, but it might take a long time because gold does not behave like a stock or bond. It just works differently. So I guess the message that I'm trying to get across to people out there that are holding on to gold, that were waiting on the moment for gold to take off, you had the moment. So is it time to kind of rake in some profits? Because I think when it comes to gold, I do think it's a little bit of a gamble to keep going so heavily into that precious metal. And I've heard arguments either way, but most of the time people are going to say, oh, it's because we're going back on the gold standard. There's not that much out there. It's physical. I've had people say, I want to have it in case I need to barter. And I just kind of, I don't mean to, I'm not laughing at anybody. I kind of am, but I'm not being mean when I laugh. It's kind of a playful laugh. But we're not in a third world country. So you're not going to have to take gold in the next few years and barter for food. Like, it's just not going to happen. And if you have gold and you think we better, if we're going to be in that position, you better have some good defense mechanisms around you as well, because you're going to be a hot target if you have a lot of gold. So I don't know. So that's kind of my message with gold, is just be careful. I think it's become a hot commodity as of late, pun intended. And I think, you have to think long and hard. Do you want to continue? Because I've seen people that have been heavily invested in it, like over 50% invested in gold. And part of me, again, it says, okay, you've had your moment, you've had your big return, because for the previous 10 years of that, there was virtually no growth in gold. And now we've seen a big run up, and it's like, okay, is it time to rake some of the chips off the table? So anyway, that's kind of what I wanted to say about gold there.
Right. Okay. Well, okay. So getting back to the Federal Reserve, and by the way, so Jerome Powell is going to be replaced by Kevin Walsh, I guess is his name. That's been announced. So it's going to happen sometime soon, right?
Yeah, Powell's term ends in May. So it'll be real soon.
So we'll have a new guy in there. Okay, so that'll be interesting to see what happens. But, if there is a delay in lowering interest rates, how's that going to impact someone in retirement?
Yeah, so if there's a delay to lower interest rates, what that likely means is kind of what we've been talking about. It likely means that obviously this is what it does mean. If it does mean this, if you go to the store or a corporation and you go to finance something, you're going to pay a higher interest rate. So like if you buy a house right now, you're going to pay a higher interest rate. If you go buy a car, higher interest rate. Yeah. Finance anything, you can pay higher interest rate. So those retirees that are looking to finance, and a lot of my retirees don't. They pay cash for a lot of things, but there is a time when I think you should look at financing. But if you go to finance today, the delay in lowering of interest rates is just going to make it more expensive. I do have retirees within my own client base, and I've sat with clients who, have, as I was mentioning earlier, they have a higher interest rate on their mortgage, and the fact that we're not seeing rates come down as quickly now they're not going to be able to refinance, because I think in their minds when they financed or purchased the house and went through in the financing, I think what happened is they thought, well, don't worry, I think rates are going to drop. And I was in that camp too. Don't worry, rates are going to drop in a year or so and we'll just refinance. But now we've seen that kind of stymie. And if rates aren't coming down, as I was kind of alluding to a few minutes ago, I think things are just going to be a little bit more expensive, because they have to keep rates elevated to kind of try to keep a little bit of a lid on inflation so that it doesn't run away. I think one of the worst things that the administration could do right now is lower rates. And of course, it would fuel the economy, but I also believe it could open up a can of inflation worms we don't want to have to try to stuff back in there.
Yeah, so true. How about this, though? Okay, so if the Fed is being cautious about our economy, does that mean everyday investors should be cautious too?
Not necessarily. I do want to say one other thing. I'll come back to this question in a second. I do want to say one other thing. With the rates not coming down, a lot of corporations borrow money. It's just a product of how they do business. And so with higher borrowing costs, it will continue to squeeze corporate profits. And I think that all of us can collectively agree on this as well, is like corporations, they don't suffer, in certain scenarios, they'll pass that on to us. So if their profits are being squeezed because of higher borrowing costs, they'll pass that on in the form of higher prices to us. So I think just on the corporate side of things, and then, one more thing on the retiree, maybe, it's a time to start focusing on income if you're a retiree. And we're looking at higher inflation rates. Some of the income products out there today, they're paying higher yields. So it may mean a shift towards more reliable income versus maybe growth itself. Okay, so let me get back to the question.
Investors, yeah.
Yeah, investors. Should they be cautious?
Yeah.
I would say I think it's always important as an investor, any time that you're investing money, that you should always maintain a long-term outlook. I believe that wholeheartedly. It's the way that I invest. And I think if you're looking for the quick hit or the quick investment, that's risky. And I don't think that's what retirees should do today. So I think what retirees should do, not necessarily be cautious, I think they should build a plan that will work in both types of the market. And part of that means having some of your money set up for income, because we all know that we can't retire without income. There is no retirement without income. And having some of that money set up for income, and then position some of the money for long-term growth. Because even though things might be a little bit volatile today, things might be a little bit of a struggle in terms of like market growth, we all know that history shows us the longer that we stay invested, the more likely we are to make money. And I've heard people use the market's a casino and it's just gambling. And it's like, no, a casino is, where you go in, drop your money in a slot, and the longer you sit in that casino, the much more likely you are to go broke. They are designed to take your money for the most part.
Yeah.
And with the market, it's the exact opposite. The longer you sit in that market chair, the much more likely, according to history, and we know history doesn't repeat itself, but the much more likely we are to have returns long term. And that's why I say you must maintain a long-term outlook. And I do think it's okay for retirees who have some money positioned for growth that they're not going to need for, say, 10 plus years. There's no reason that we shouldn't assume. And again, I'm not predicting the future or guaranteeing results. I'm just saying, okay, based on history and looking at charts, there's no reason for me to assume that in 10 years, if I invest today in the market, that my money should be higher in 10 years. And in some cases, it should at least double in some cases, using the rule of 72, right?
Yeah.
So I don't necessarily think you need to be cautious-minded, because I've talked about the psychology of retiring, and there's already enough of that happens emotionally in our minds, and that can bleed over into our investing. So that's why I kind of point back to, all right, if a retiree starts to develop a plan, you can kind of mitigate some of that emotion by just knowing, okay, I'm going to put some of my money here because this is the purpose for this money. This money is meant for income. I'm going to put it here. I'm going to draw income off of it. And my other investments, I'm going to position them for a little bit more growth because I don't need them for 10 plus years, and I'm going to allow them to grow. At the same time, I think the retiree and the pre-retiree too, we look at both when people come in, should be looking at, am I doing everything as tax efficiently as possible? Because with the rate of inflation that we've seen and the cost of goods and services that we all see today, one of the best things that we can all do is to mitigate how much money we're handing to the IRS. And you can do that legally just by understanding, how to utilize the current tax code and things within your retirement plan, things within your health plan. the way that you withdraw money, the extra bonus deduction that's out there for seniors today who are 65 and older, Roth conversion. There's a whole multitude of ways for today's retiree to do some tax-efficient strategy planning to try to limit the amount of money that's going out the door in taxes, which ultimately means that there's more net income hitting your pocket, which will help you kind of offset and pay for some of those higher cost of steaks that I bought last weekend. So, so I don't ever encourage. You have to be careful because I think conventional wisdom tells the retiree a few things. One of them is you can't retire if you have a house payment, and that's wrong. That's absolutely wrong. Mm-hmm. You can have a house payment in retirement if you got the income to cover it. And not every one of my retirees has a paid-for house, so that's wrong. But that's what conventional wisdom tells us, and that's what would be ideal, right? That would be ideal, but it's not absolutely necessary. The other thing that I think conventional wisdom, retirement wisdom, tells us: every retiree, I'm at retirement, and you should be more conservative. Well, maybe not. Maybe not. I've got people that have $150,000 in Social Security and pensions as clients. And that more than covers what they spend on a monthly basis. Do you think they need to be conservative? No, they don't, because they don't need the money right now, and they can actually grow it for their heirs, or they can Roth convert and leave them tax-free money. So I think you have to be careful with, I'm not going to do it on the air. I'm not going to use a broad term that, should investors be cautious? I think it really depends on your specific situation. This is why I say it, and I'll say it again. Whether you come see us at the office, or you work with somebody else, I don't care. Just find somebody that you can trust. You can sit down to have a calm, level-headed conversation about your retirement plan. Build a long-term plan. Stick to it. Now, listen, in a plan, you might have to make adjustments, but you shouldn't be making radical adjustments. But build a plan that you feel like you can stick to so that you don't have to do the in and out thing. You don't have to worry, to calm some of that emotion and really start to eliminate some of that financial guesswork that we see out there today. Build that plan so you know what's going to happen, and stop, relying on what I would call generic advice, like I was talking about earlier. You can't retire because you have a house payment. Now, it might be the mindset of somebody in the family that might say, maybe the wife is like, hey, I want to get this house paid off. I can't sleep at night because my house is not paid for. Okay, good. We got to figure out how to do that, because no matter how much math I run and how much numbers I project on the screen and put on a spreadsheet, if in this case the wife wants the house paid off, she ain't going to sleep until that house is paid off. So we got to figure out, how do we marry the two? How do we marry math and emotions and make sure that they make good decisions? And I need to make sure that the spouse is sleeping. And in this case, I'm using the wife here. I need to make sure that when she lays down, she is not going to worry that if she loses her husband, she's stuck with a house payment. Even though she might be okay, I have to figure out a way to help her achieve that goal of getting that house paid off. And those are just the type of things, Luann. We go a little bit deeper, like I was saying earlier. It's a little bit more than numbers. There's emotions and psychology. A lot more than
numbers, yeah.
There is. And I think, when people come in, they recognize that. I mean, we sit in a discovery session for maybe about an hour, and we go through the sheet that we have, and we collect information, and we share stories. And sometimes my son actually was meeting somebody last week, and he said they started crying in the meeting. So it can be emotional at times, but hey, that's what we're here for. Everything we talk about is confidential. And that first meeting lasts about an hour. So if you're interested in setting up a discovery session with us, you can give us a call at 256-937-2010. Again, our number is 256-937-2010. Give us a call to set up your discovery session. Hope everybody has an awesome and blessed week. And remember to serve every person in every situation with a servant heart.
Neither AEWM nor advisors providing investment advisory services through AEWM recommend or facilitate the buying or selling of precious metals.
Investment advisory services made available through AE Wealth Management LLC, AEWM. AEWM and WG Financial Group are not affiliated companies. Insurance products are offered through the insurance business WG Insurance Services. WG Financial Group is an investment advisory practice that offers products and services through AE Wealth Management LLC, AEWM, a registered investment advisor. AEWM does not offer insurance products. The insurance products offered by WG Insurance Services are not subject to investment advisory requirements. AEWM and WG Financial Group are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. WG Financial is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. Information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by WG Financial. This radio show is a paid placement.